Joining us now on the Megacast is Jason Brown. He is a stock market coach as well as an options trader and the founder of the Brown Report, which you can find online at thebrownreport.com. Jason, thanks for joining us today.
Tyler, thanks for having me.
Appreciate having you on. And usually when we're talking to each other, we're talking about different trends in the market or different methods that people will use to work their way through the markets, work their way through stock trading or investing to bolster their portfolio. But today, let's talk about ways that people can leverage their money investing in alternative assets. First off, define for us what it means to have alternative assets and how that can really also be helpful in someone's investment portfolio.
Yeah, so when we think about an asset class, typically we think about stocks and bonds. That's the first asset class that most people minds go to. But real estate is an asset class as well. But those are traditional asset classes. So when we talk about alternative is really just the things that most people don't think about or that people run to in times where the normal asset classes aren't working. So when real estate is not working, when the stock market technically is not working, what's the alternative? Sometimes the alternative is gold, right? People move into gold, but I want to go alternative. So I guess alternative squared. So here's something that most people may not have thought about as an alternative asset class that I've recently dabbled in myself. Number one is watches. And number two is cars. Most people don't think about cars as an asset class, but I'll give you a perfect example. I bought a Ferrari, and I know it sounds weird. I never thought I'd be live streaming saying, "Hey, I bought a Ferrari." But here's the point of the story. I heard about investing in these Ferraris and these cars and that they hold their value. So I bought a Ferrari just thinking, hey, I'll try it out. I don't plan on making any money, but let's see if I can not lose any money or drive a Ferrari for not that much. Well, I ended up obviously driving. Well, not obviously, you don't know, but I drove the Ferrari for about 2 years and actually sold it for about $35,000 more than I paid for it. And so that was my first real introduction into these alternative asset classes, learning that sometimes these cars, when they're produced in a limited number. And once they cancel the production, it becomes either a collector's item or people are willing to pay more for it because they can't get it anymore. And then you add the COVID boom on top of that or the backup of cars. And then you could really see this increase in price in this alternative asset class. The second one is watches. I recently, I say recently, within the last 2, 3 years, started studying watches. And when you look at Rolexes, you look at Richard Mille, you look at Patek Philippe's, I'm talking these high end watches, and sometimes even the entry level watches like a Movado. Why shouldn't I say a Movado? Maybe an Omega, maybe a Breitling. These watches hold their value and they only make so many quantities of them. So there is a whole group of people that invest in these alternative assets like cars and watches, and they actually increase by 10, sometimes 20 and 50%, where you're able to get a return and be able to hold on to a nice piece of jewelry or drive a fun car.
So when people are investing in these alternative assets, or they're looking into investing in them, particularly who should be in those positions, or who should be then exploring, okay, well, I've made X amount in the stock market, in stocks and in bonds, and maybe it's time to diversify a little bit and go into these alternative assets. What's a good time to start exploring those?
Well, the best time to start exploring them is, right now, right? Whether you have money or you don't have money, the best time to explore investing either directly into the stock market, real estate, or into alternative assets is right now because you don't you won't be able to spot an opportunity unless you've already been studying and looking for it and preparing for it. And then when it's time to switch to the alternative asset, you usually need to make a quick decision and not at that point start studying what is an alternative asset and is it going to work. Now for those who should consider trying it, it's you definitely want to master the tried and true industries first, like the stock market or like real estate, because once you start to go into alternative assets, if you don't have the money to sit inside of a watch or a car, if you don't have a garage or a place to store it where it's not going to get scratched or broken into, that could become an issue. If you don't have the money to keep up on the maintenance of it until you sell it or carry the insurance policy on a watch or a house until you can, I mean, or a car until you can sell it, then you might not want to dip into those alternative assets just yet. But that shouldn't stop you from starting to study and learn about those alternative assets. And then the other thing is the reason why you want to start studying about it now is in every asset class, there's risk. So in the stock market, you buy something, you risk it going down. You buy a rental property, you risk the person not paying rent or kind of tearing up your property. Well, in the alternative asset class, there's also risk because if you buy a watch and you buy it secondhand off eBay or from another person, the risk is that, how do you know you're not getting a fake watch? So if you don't know what a real Rolex looks like, you could have just donated ten to $20,000 and bought a fake, and the whole alternative asset investing just went down the drain. If you also invest in these kind of collector cars or these exotic cars, there's a risk that if you're going to start driving it or doing something outside of collecting it, holding it, maybe taking it out a little bit, but if you exceed the mileage or you get into an accident, that kind of changes how you can exit that alternative asset position. So you want to start studying for it now, but you also want to be in the position to take care of the alternative asset when you have it, because you're storing it at your house or your private residence versus in a bank or in an account with your broker.
We're joined by Jason Brown from the Brown Report. You can read more information on all of his different tips, tricks, and extensive research into the stock market and trading at thebrownreport.com. That is thebrownreport.com to keep up to date with Jason and send him any information or questions that you may have. Thebrownreport.com. With any sort of investment, there's going to be volatility, there's going to be risk and reward. In terms of investment in alternative assets like we've been speaking of today, how does that compare to stock trading or investing in the market in terms of risk and volatility?
Well, the good thing about alternative assets is that someone will always want like a Ferrari or a Lamborghini. So what's cool about it is your risk of it going to zero is very slim to none. Similar to if you're buying a good company like Amazon, like the risk that it's going to zero would mean Amazon just went out of business or someone found a better distribution network and a better way to build an e-commerce platform. And so when you look at a Ferrari or a Lamborghini, you can at least go to sleep and feel good that the volatility is going to be very, very small because someone always wants that car and someone in a certain financial class can always afford that car, especially at the right price. Same thing with like a Rolex or some type of watch that is, well sought after. There will always be a market for it. So unlike the stock market, you won't see like a Rolex go from 20,000 to 5,000 and then back up to $20,000. So like that type of volatility doesn't exist. You'll see it maybe at 20,000, maybe it fluctuates down to 18, then goes back up to 22 maybe, but you won't see those big, 50% off sales happening in the exotic car and the luxury market. And typically, the people who have those assets are not people who are affected by interest rates fluctuations or getting laid off from their job. They might be business owners, entrepreneurs, investors. So they don't really have fire sales. People think, like, oh, the economy is going to be bad. Everyone's going to sell their Rolex, everyone's going to sell their Ferrari. But typically that group of people is kind of insulated from fire sales. They don't just, I have to unload this today or else. So you see less volatility, less people just dumping their cars in that income bracket. So that actually reduces the volatility. Now, I know sometimes when people think of alternative assets, there's also Bitcoin and those things, but I wanted to bring in a totally different asset class that people may not have thought about, like cars and watches.
Again, more information can be found and helpful tips at thebrownreport.com. Information on this, on the market, on trading and investing as well. And in terms of the long term gains that you can have from investing in these alternative assets, how does that compare to stock trading and certainly to investing, especially when you're a well informed investor and on either side?
So one of the differences, you're not going to see a car or a watch usually go up 200%, 300% like a stock can. So just like you're not going to see a car or a watch you typically fall 50 or 100%, you're also not going to see it rise 50 to 100%. So that's going to be, or like 100, 200, 300%, like a Tesla, then split and then rise again, then split like Amazon did, like Tesla did. So you won't really see those type of gains in those alternative assets, but that's why they're alternative. They're used as a hedge to offset, like maybe I won't make a killing, but also won't get killed. And sometimes that's equally as important when investing. And that's why people look for alternatives. They say, hey, I don't necessarily need to make a bunch of money. I just don't want the pile of cash that I have to go to zero. And so that's going to be one of the big differences between, alternative assets and traditional investing in the stock market. I think the second thing that's going to be a little bit different is you can hold a stock maybe 10, 20, 30 years. Again, it may go up, split, pay dividends, and continue to earn money. Most of the time, a car or a watch will hit its max value. It doesn't just typically keep going up, or paying you dividends or anything like that. And so the watch and the car alternative asset game is typically a game of volume. Maybe you buy one car, you sell it. You buy another one, you sell it. And so you're going to have to keep doing it over and over again, turning over newer editions of the car or picking up different collectible versions of a car or a watch and doing it over and over again to see consistent returns if you don't just want a one time wonder. And I do want to say this. I know talking about cars and watches, and that's sometimes can be considered a guy thing. This also exists in like the purse world with Hermes bags and all these unique Burberry bags that come out that are limited edition collectible items for women. The same thing exists in that field as well. Some of these bags they purchase for maybe $1,000, $2,000 end up selling on the aftermarket for $3,000, $4,000 because they're limited editions. You can't get them anymore.
More information again, thebrownreport.com. You can find a lot of information, resources, and learn to invest smartly and informatively in the stock market and trade on the market as well with Jason and his team at the Brown Report, thebrownreport.com. On alternative assets, in terms of maintenance, I would imagine that's a huge part of that investment, maintaining these different products that you are holding and making sure that their value certainly doesn't decrease. And in some cases, that maintenance can actually increase the value. How much of a consideration does that need to be before somebody invests in some watches or certainly in cars and goes into the alternative asset market?
So maintenance is a normal part of owning an alternative asset. And typically maintenance can actually improve the value because people want to know that it was taken care of. And so if you start to look into buying a secondhand watch, some of the questions that, or if you start selling them specifically, one of the questions that you'll get asked is, when was the last time this watch was serviced? Because people want to know that the movement, because they're buying the Swiss movement in the watch, which is, there's no battery in it. It's all movement based on your wrist. It recharges itself, different things like that. But people want to know that the movement has been serviced, has been oiled, has been checked. And is in good working condition. Same thing with the car. Most people think, oh, I'm just going to buy a Ferrari or I'm going to buy a Lamborghini. I'm just going to stick it in my garage and I'm just going to let it sit for 10 years. Well, actually, cars that sit typically have more problems than cars that are driven, or at least the tires have been moved so that it doesn't collect flat spots. And then you need new tires, and you're like, they're brand new, but it's been sitting. So it's been sitting with a lot of weight and pressure. And so it's collected flat spots. People want to know that the oil has been changed. If the oil's just sitting at the bottom of the pan or at the bottom of, all the wires, it can start to rot through the wires and through the cabling instead of it being because it needs to be kind of rotated on a regular basis. You need to start it up, drive it, make sure the oil is changed, make sure it's maintained, and that 2 to 3 thousand a year maybe that you may spend on maintenance actually increases the value because they want to buy from someone that they believe has maintained this good. They don't want to buy a car only to find out it needs a new engine, only to find out the oil's never been changed, or a watch to find out the movement has never been checked and now it needs to be replaced at the same price, if not more, than buying a brand new watch.
Yeah, outside of those cryptocurrencies and such, and some of those solid currencies like gold or silver, if you're investing in an alternative asset, like you said, those watches, those cars, those boats, houses, certainly they're all functional objects and functional things, and so the biggest value in them is their functionality, and otherwise are just nice decorations. And nice decorations typically don't maintain that value for very long. Jason, appreciate your time. Appreciate you joining us. Before we let you go, at this time in the stock market, we know we're experiencing so many ebbs and flows and fluctuations. Anything else that we haven't discussed today regarding trading or investing that people should be keeping in the back of their minds right now as they explore their assets in the market?
I think people should just keep in mind that, we're getting close to the end of the Fed hiking their rates, which means the bottom may be somewhere near. I know sometimes we wake up and we hear doom and gloom all the time, but the reality is the Fed is raising interest rates so that they can bring inflation down. I just saw that home interest rates just hit 7%. Keep in mind that may be bad news short term, but that's good news long term, so that prices of houses can't keep selling over 100,000, 50,000 over asking price. And so as the competition comes down, because the ability to borrow money is more expensive, the ability to get the home that you want without paying over a ridiculous price is going to start to come back into place. And the same thing with some of these normal assets with the stocks. You got to think, stocks like Apple or Amazon that were trading at $3,000 are now trading off the split basis at, 115 bucks. This is now an opportunity for you to afford something that you used to not be able to afford. And I think if you give it enough time, you're going to see the values increase, because we don't get worse at e-commerce. We don't get worse at technology. We're not getting worse at electric cars. We're only getting better, and they're only becoming more prevalent.
Get these kind of tips regularly from Jason and his The Money Markets and Mindsets podcast on thebrownreport.com. Jason, thanks so much for joining us.
Tyler, thanks for having me.